In this video, I'm talking about 7 things that may maximize your 401k performance in 2022. Hey everybody, it's Matthew Jackson here from 401k Maneuver. Remember, we provide online professional account management for your 401k with the goal of supercharging its account performance. So stop leaving money on the table each and every year in the form of lost returns. Let us help you. If you're new here, be sure to hit the subscribe button, and the links to everything that we mention in this video you can find in the description box below. So let's jump right in. Hey, are you looking for a way to get ahead on 401k retirement savings this year? Well, check out this list that I'm going to share with you. It's 7 things that you can do today to help maximize 401k performance in 2022. First, don't stay with the default plan. More and more employers are automatically enrolling employees in their 401k plans. In fact, more and more companies' 401k plans use target date funds. You see them on your statement. It's the 2020, 2030, 2040 fund. They use them as their qualified default option. And yes, it's totally legal. Now, the Pension Protection Act of 2016 allowed employers to direct plan participants' assets, that's your money, into a target date fund and not be liable should the employee not select an investment. Now, MarketWatch states about 70% of U.S. companies automatically enroll employees into 401k type plans, and more than 86% of these firms now direct people's money by default into target date funds. According to Vanguard's How America Saves 2021, roughly 4 in 10 single target date investors choose the funds on their own and not through default. That means 6 out of 10 don't select an investment and are automatically enrolled in the default option. So here's why this may be an issue if you're one of those investors. Target date funds are based on the date of your expected retirement. If you're younger and plan to retire in 2050, you're told to select a 2050 fund. If you're wanting to retire in 2030, you'd select a 2030 target date fund. Now, target date funds fail to take into consideration your salary, your profession, your risk tolerance, your goals, and your objectives. Again, you're simply put into a fund based on your expected date of retirement. In addition, target date funds may not appropriately manage downside risk. When the market's not doing well, they may underperform in good markets and do a poorer job of managing downside risk during tough markets. According to Morningstar analyst Jeffrey Holt, in March of 2018, he said, in the long run, the biggest risk in target date funds is that they won't meet investor expectations for avoiding losses. Those looking to maximize 401k performance in 2022 should be thinking long and hard about sticking with the default target date fund. There are other investment options available to you where you can take into account your risk tolerance and your unique goals and objectives. Make sure you check the description box below for a complimentary guide. Are target date funds good or bad? Number 2, regularly manage changes to your investments. Regularly rebalancing your 401k is important because the stock or mutual funds you originally selected, like a year ago or more, they may not be right for your risk tolerance now. However, even though this is important, 80% of 401k investors fail to rebalance. Rebalancing your 401k is the process of realigning the weightings of the assets or your investments in your portfolio. This means you periodically buy or sell assets in your portfolio in order to maintain the initial desired level of asset allocation or risk, you guys. Few people rebalance their 401k accounts, and even those who do fail to manage risk through proper asset allocation. Rebalancing only the percentages of current holdings does not consider current market or economic trends, and this may result in more significant losses during down markets and missed opportunities for growth during good markets. If you aren't rebalancing your account allocations, you guys, you may be missing out on earning more and keeping more of your hard-earned retirement savings. So check out the video in the description box to learn more about how rebalancing may help you safeguard your retirement savings. Number 3, reassess your risk tolerance. There's a common belief of investing that says if you want safety and security, you have to sacrifice good returns. This belief can be really costly, especially if you're close to retirement. If you want your portfolio to grow, you want to hold both stocks and bonds. Morningstar reported that since World War II, the S&P 500 stock index has returned 11.1%, which is 7 percentage points more than the consumer price index. And even if future returns don't match those gains, equities are still likely to outperform other assets over the long term. And according to Morningstar's head of retirement research, David Blanchett, a 50-50 stock and bond mix, which gives you growth and income, it's a good starting point for retirees. Some other advice, especially given to older investors, is to build up cash savings. So if the market takes a dip, you have cash on hand and can avoid tapping into your depleted investment portfolio. The downside to cash is that most money market accounts pay very little to no interest. So if you're cash rich, you risk losing value due to inflation. And while it's important to reallocate your investments per your tolerance to risk, if you're too cautious, you risk coming up short when you retire because you aren't able to maximize growth. Number 4, try to max out the 401k contribution limit. Employee 401k contribution limits for 2022 are $20,500, and this applies to 401k, 403b, most 457 plans, and the federal government's thrift savings plan. And for those age 50 and older, the 401k catch-up contribution is $6,500. And not everyone can max out their 401k contribution each year. So between the cost of living, family obligations, debt, and rising healthcare costs, we get it can be a big stretch. However, just saving a little bit more than you did last year can help you maximize your 401k account performance. So if you can save 2% more than you did last year, you can swing 5% more, you guys. You can do it. Let's say you earn $65,000 a year. If you saved 1% more of your salary, you'd save an additional $650 a year, or $54.16 per month. If you save 2% more of your salary, you'd save an additional $1,300 per year, or $108.33 per month. And if you saved 5% of your salary, you'd save $3,250 more each year, which is $270.83 per month. Now imagine what an additional $3,250 each year will bring in returns 10, 20, or 30 years down the road. Take out a calculator and see what saving an additional 1, 2, or 5% adds up to. Then figure out how to contribute more in 2022. Hey, if you're still watching, please smash that like button, hit the subscribe button, and share this video if you found it helpful with the people that you love and trust. Make sure you hit the little bell on the right to receive notifications of our next posted content. Number 5, contribute at least the company match. An easy way to maximize your 401k performance in 2022 is to contribute what your company will match. If you aren't currently contributing what your company matches, you're basically turning away free money. In some cases, the company match may double the amount of what you're already saving and may increase your retirement lifestyle. Let's say your company matched 100% up to 6% of your pay. With a $40,000 salary, you could put in 6% or $2,400 for the year, and the company would match this at 100%. That's $2,400 per year of free money that will help you grow your retirement savings and help you maximize your 401k performance over time. Number 6, get engaged with your investments. Too many people don't understand what they're invested in. They simply set up a 401k, they fund it, and they don't think much more about it. Don't do that, you guys. If you want to potentially maximize your 401k performance, one of the best things you can do is become financially literate. Get engaged with your money. After all, it's your money and your retirement future that we're talking about. How you do this starts with a decision to take control of your financial future. Here are a few ways you can enhance your 401k savings knowledge. First, watch our The Evolution of 401k Account Advice webinar. The link is in the description box below. Next, continue reading blogs like this. Also, open your 401k statements when they arrive and ask your plan provider questions if you're unclear about your 401k investments. Hey, be sure to check out the description box below for a complimentary article, 5 questions to ask your 401k plan provider sooner rather than later. And last, work with a professional. Get the help that you need. Learn how to read and understand a 401k statement. Be sure to check out the description box below to watch that complimentary video. Here's what it comes down to. Do whatever you can to gain the knowledge you need to make the best decisions regarding your money. And once you start to educate yourself, it won't be difficult for you to understand. Number 7, seek professional help. 401k Maneuver exists to help employees just like you grow and protect their 401k accounts. We provide independent, personalized, professional account management to help employees just like you grow and protect their 401k accounts. And we do this without in-person meetings, so you don't have to drive to an appointment or spend hours preparing for the meeting. Our done-for-you virtual service allows you to keep your 401k right where it is while we review and rebalance your account based on your risk tolerance and current market conditions. All you need to do is connect your account to our secure platform, and we manage your account for you. And there's no need to move your account. You can keep it right where it is with your employer. As a fiduciary, we are bound by law to put your interests first, and we do not receive commissions on any trades that we make on your behalf. Watch the short video in the description box below on how it works and how 401k Maneuver may help you increase your account performance. Have questions about your 401k performance? Book a complimentary 15-minute 401k strategy session with one of our advisors today.